Hello tubers, today we're going to talk about this EA BTFD trade. I'm going to show you how to buy the dip. When most people look at this chart, they see this crazy amount of selling and their danger alarm's going to go off. And it's just going to be going crazy. They're going to say, why on earth would anyone want this stock? But when this type of danger alarm is going off for most people, this is usually a cue for you to look for opportunity. Because when most people are selling or their danger alarm's going off, they make irrational decisions and they start panic selling. So what happens is the stock gets crazy oversold and eventually the price becomes too good to be true and we get a huge relief bounce. So first things first, when we want to make a BTFD buy, we want to make sure that if a stock is tanking like this, there isn't some external catalyst causing this. So when I saw this chart, the first thing I did was go to Twitter, go to my chat rooms, check the various news agencies, just to make sure there isn't something crazy going on with Electronic Arts today. I think the closest thing that came up was some old news about some CEO selling a bit of his stake in the company last week or something. So more or less nothing relevant, which gives me the green light to start picking areas that interest me on the chart. Because the chart is everything and we need to know where this thing is likely to turn around before we even attempt to buy some for a dip. We do that by taking a step back and looking at some of the higher time frame charts. And as you can see, I've already marked a few of the levels, but when I was playing this, I came in and I said, okay, this zone seems relevant. Here's one, two, several touches. So we've got pretty clear resistance somewhere around 94, and then down to 92, we've got 1, 2, 3, 4, all these touches around here at 92. And then all the way down to 90 seems to be about where sellers get exhausted for the past, it looks like 2 or 3 months here. So how exactly do we play this then? Well, I believe I gave a signal that basically I was buying my first piece somewhere around 93.5, but that if you're uncomfortable with a trade like this, which is one where you're taking a starter and you're layering in, increasing the amount you buy into the support zones, that you shouldn't take your first shot until somewhere in the mid 92s to 92 level, which is basically where this first support zone, strong support zone was. So, you could take your first stab here and start layering into the final support or the next support area down. What this allows us to do is get into this stock at a price that is where tons of other people have bought in and gives us, a target where we feel comfortable getting in with size. Because we know that it's pretty likely that this area holds, and if it doesn't, it just means that this next spot is even more likely, as long, and this is the key aspect of this trade, when you're looking at these support zones, it absolutely must be virtually all red. You want this huge extended panic selling session coming into these levels. Because if it gets relief bounces before then, well, we've kind of missed the point of the trade. We're trying to take advantage of the extremes and then sell on the first relief. So if this had, come up a little bit here, came back down, come up a little bit there, come there, I'm not as interested unless it starts forming some other pattern that gives me a signal to get in. A BTFD trade is one where I'm buying the extreme panic into an extremely strong support level with the aspirations of taking money off on the first huge relief bounce. The harder it falls, the harder it's probably going to bounce. on the event that it turns around. With that said, if you had followed the guidance and didn't take the first entry that I did as a starter and got your first entry somewhere around this 92, maybe 92.50, whatever it is, 92. If you're playing this appropriately, your first layer should be really small, and as it continues to fall, you're getting excited because you get a chance to buy more and get into, an average or more reasonable position size where you can make some good money. This layering also ensures that you are nearly averaged in within a $0.50 on this stock, or maybe $1 or $2 on some other stock with a bigger range, or 20 cents of the bottom, so that your average is almost always at the bottom. And as soon as it turns around, you're pretty close to profit within the first candle almost. So, if you took your first piece, say even a little bit higher than the bottom down here, say 92.30, which is about where I would have suggested it. And then maybe you get your next little piece down here under 91, or you didn't. First candle up, you're already break even, so everything from there is profit. So I was suggesting you get in around here, and I was already saying sell around here your first piece with our next target right below the VWAP. These are logical, pointed executions. You can replicate this. It's really easy. It's all based off of the chart. And that is basically all you have to do to buy the dip. So hey guys, if you enjoyed this video, please like, please share, and if you have any questions whatsoever, just leave me a comment or shoot me a message on my Twitter, and I'll try and help you out. I think this is a really easy setup, just like most of the things that I'm going to post, and I wish you success in the markets.